Good morning students, welcome to my accounts class. Today I will explain to you accounting equations. Chapter number 2 of your accounts book. If you see on the board, there is a formula written there. Assets is equals to capital plus liabilities. Assets means all that belongs to business. Capital means the money invested by the proprietor owner at the beginning of the year. Liabilities, what the business owes to outsiders. When capital is added to liabilities, it should be equal to assets of the business. This is called accounting equation, which also forms the basis for dual aspect concept. If you see in the book, there is a balance sheet given on page 2.1. On the left hand side are the liabilities, that is capital, and other liabilities, creditors in bank order, which the firm owes to outsiders. On the right hand side are the assets of the business, which belongs to business, which remain the business, cash and bank, debtors, stock in trade, furniture, machinery, building. The left hand side should be equal to right hand side, that is all liabilities is equal to 1 lakh, all assets is equal to 1 lakh. Thus, accounting equation assets is equals to capital plus liabilities is proved. This can be expressed in the form of an equation. If you see the next page, that is on the extreme right left hand corner, you can start with assets is equal to liabilities plus capital. From the question, you can take those. Assets 1 lakh, liabilities 40,000 and capital 60,000. When both sides is added, it comes to 1 lakh. Then utility of accounting equation. The first one says basis for double entry system accounting, that is the assets should be equal to liabilities to capital, or the left hand side should be equal to right hand side. Thus it forms the basis for dual concept or double entry system. Then basis of balance sheet, as you saw in the previous page, the liability side should be equal to asset side. We prepare the balance sheet in the horizontal form. Then we have ensures the accuracy of accounting work. Since they are recorded time to time, accuracy will be maintained, or if any record is to be ascertained, we can see the balance sheet immediately. The meaning of debit and credit, which is the most important part of the accounts. First of all, we should understand the meaning of an account. If you see on page 2.3, there is a cash account prepared. In the center, you will write cash account. On the extreme left hand corner, debit or DR. On the extreme right hand corner, credit or CR. Then you will draw a horizontal line and divide the page into two equal halves, which forms an account in the T formation. So left hand side is called the debit side, right hand side is called the credit side, thus forming a basis for account. Likewise, we prepare bank account, furniture account, land account, salary account, wage account. This is the meaning of an account. In order to decide when to write on the debit side of an account and when to write on the credit side of an account, there are two approaches, or we say rule of debit and credit. The first approach is American approach or modern approach, and the second is English approach or traditional approach. The English approach is also known as double entry system, which we will discuss in the next chapter. First of all, understand the meaning of or the rule applied under American approach. The rules of debit and credit depend on the nature of an account. For this purpose, all the accounts are classified into the following 5 categories, that is assets account, liabilities account, capital account, revenue account, and losses or expenses account. The first account is assets account. Assets account means all those accounts which remain in the business for many years. They may be fixed asset or current asset. Fixed assets like furniture, land, building, plant, machinery. Current assets like debtors, stock, cash in hand, cash at bank. Now the rule applied here under assets account is when any asset or furniture is purchased, the furniture will increase, asset will increase, it will be show an increase on the debit side of an asset. So we'll post it on the debit side of the or left hand side of the asset account or furniture account. Suppose you have sold goods for cash. So cash is coming in into the business, increase in asset, it will be debited or posted on the debit side or left hand side of the cash account. Suppose you have purchased goods for cash, cash goes out. When you open the cash account or asset account, it will be shown on the right hand side, decrease in asset, or you will credit it. Next we have liabilities account, money which you owe to outsiders or suppliers. Suppose you have purchased goods on credit, you will open the suppliers account, increase in suppliers account will be credited or it will be posted on the credit side of an account. If any payment is made to the supplier, supplier's account will be decreased, it will be shown on the debit side or left hand side of the creditor's account, supplier's account or liability account. Then we have capital account. Capital is also a liability. Any capital brought in, introduced, it will increase the liability, it will be on the credit side of the liability account or capital account. Or if any money is withdrawn for personal use, capital account will decrease, it will be posted on the debit side of the capital account or liability account. Revenue account. If there is any increase in revenue, for example, rent received, commission received, interest received, it will increase the revenue of the business, it will be posted on the credit side of an account or rent account or commission account. But if there is decrease in revenue, it will be posted or written on the debit side, left hand side of the revenue account. And the last is expense account or loss account. Salary paid to any worker or salary paid to employees will increase the expense. It will be debited or posted on the debit side of the expense account or salary account. If there is any decrease in expense, it will be posted on the credit side or right hand side of the expense account. On the basis of the above discussion, it can be concluded that the term debit should not be taken to mean favorable things. It may represent favorable or unfavorable, increase or decrease depending on the nature of an account. Similarly, the term credit may represent favorable or unfavorable, increase or decrease depending on the nature of the concerned account. In the case of assets and expenses, debit means increase, credit means decrease. In the case of liabilities, capital and incomes, debit means decrease and credit represents increase. There is one last term given in your book, valuation account. Valuation of account means an account which is used in the combination with other account of a balance sheet so as to show an asset at its net value. That is, debtors are shown on the asset side, but there may be some debtors who may not be able to pay the full amount at the end of the year. So we create a known liability or known loss which may occur in the name of provision for doubtful debts or provision for discount or provision for depreciation account, which is shown as a deduction from the respective account on the asset side in the balance sheet at the end of each year. This is all accounting equation for today.